We come to the session one of the last day, which is dematerialization mechanism of commodity derivatives. All right, it's going to be a discussion. It is going to be moderated by Mr. Manoj Jain, Chief Compliance Officer, the Multi-Commodity Exchange of India. May I please request him to come on stage? Give him a round of applause, ladies and gentlemen. Thank you. Over to you, sir.
Thank you. Hello, everyone. Good morning and a warm welcome. I think day 3, though we are saying that we'll bring a lot of energy, but unfortunately, I think with PM's presence, so a lot of participants yet to reach the sessions. But time is fixed. We'll start off. So I'll like to invite the esteemed panelists for this session. So we have the names there. I'll invite Farokh Patel, kindly. So Farokh is Vice President Audit, Inspection and Compliance at CDSL. So Farokh is again having a big role in ensuring operational scalability, the policy frameworks, creating regulatory compliance frameworks for the depositories, and also innovative solutions in the tech space. Our next panelist, I'll invite Ajay Kumar Malla from Axis Bank. So Ajay has been again a pioneer in his initial days through exchange on the product side, and I think almost 17, 18 years in ensuring solutions on the trade financing. So he's Senior Vice President at Axis Bank, heading commodities finance, commodities trade finance, FPO finance, agri-infra finance, and also Bharat Banking. Our next panelist, Mr. Jayprakash Gupta. So Jayprakash ji is passionate on the trading side. I think his passion on creating cutting-edge platforms for our long-term investors, super traders in capital markets and commodity space. So that's how he has founded Dhan under Motilal Securities. So he's the founder of that new platform which is gaining super traction. Yeah. Our next panelist, Mr. Prashant Vagal. I think he just stepped out, is it? Okay. We'll just get him across quickly. एक बारी बोलना अमन को प्रशांत वागल जी I think he has just stepped out. Yeah. So I'll invite Arnav Datta. Arnav is head of warehousing operations, collateral and delivery at MCX Clearing Corporation. So again, his pivotal role as a clearing corporation in ensuring an integrated ecosystem, both from a trading perspective, then their own setups on clearing, as well as the repositories and the entire banking chain. So that's how he has been playing a pivotal role in the entire ecosystem. Our next panelist, Mr. Kishore Narne. Kishore is Executive Director at Motilal Oswal Financial Services. So again, a very big role in ensuring global practices. That's how. So he's heading commodities, global markets, NRI business, gift city operations, and even Dubai operations for Motilal. So I think again his passion on bringing global best practices as well as the global participants to India across the capital market ecosystem. So that's the panel here. We'll get Prashantji also shortly. The key objectives of session today, if you see the distinguished panel, so we'll cover the way our commodity ecosystem is building, how dematerialization is helping creating an integrated end-to-end offering in the capital markets. Equities is a very widely accepted and known framework, while commodities is something which is emerging. So that's how a perspective from depositories, how their best practices help equities, how it will help commodities. On a trade financing, what are the best practices? Because trade financing can act as a funnel in, again, increasing the flows in the exchange traded as well as even the OTC markets in increasing the commodities acceptance. Prashant ji, kindly, you can join here. So our panel is Prashant Vagal ji. He is Executive Vice President and Chief Operating Officer at NSDL. Again, he has seen the entire life journey of how depositories have grown last 25 years since inception and how businesses have scaled up. So that's where his entire journey and role has been. So just redefining the objectives, just to continue with that. So a perspective from how the depositories infrastructure has grown, how the current repository in commodities, how that setup is, what are the challenges, how we really need to scale up those. Then we have the voice of customer from the trading perspective, what they need in an integrated ecosystem on commodities, the global best practices, how to create that trust and scalability in India to attract that wider participation. Then also the regulatory perspective that we'll build in to really achieve that ultimate target of growing commodities. May not be same scale as equities, but there is a huge potential to really grow it, both from products perspective, from the participation perspective and reach perspective. So that's the overall stage for us on this panel. So I'll just start up with Farokh ji. So he can give us a perspective on how the current repository mechanism in commodities is set up, which handles this ecosystem on dematerialization. And we'll take it further from there on what kind of challenges in that systems, how to really scale it up, what role regulators or tech can play in scaling up the operational setups in repositories. Yeah, Farokh.
Thank you, Manoj. Yeah. So good morning, everyone. So basically, repository works in India currently is focused in two main repositories. We have CDSL Commodity Repository, which is also now known as the Countrywide Commodity Repository Limited.
Yeah, you can use this for
moving this. Yeah, thanks. And we have the National E-Repository Limited. Now, Warehousing Development Regulatory Authority was set up under the warehousing regulations in 2007. Now, the regulatory authority is looking into the negotiable warehouse receipts. Now, just to give the roles of both the repositories would be like they assist in ease in means of transferring this ENWRs, that is this electronic negotiable warehouse receipts. It is, once it is into DMAT, it is easily transferable, it becomes liquid, the commodity, physical commodity can be liquidated to get cash for the farmers. Now the transfer, pledge, repledge, collateral, so I have it. So this provides transparent records of what is stored, where it is stored, and what quantity it is. Now, just to give you a brief for the benefit of the participants is what is a warehouse receipt? It is a document issued by the warehouse to the depositor of goods certifying that the goods have been deposited. The warehouse will deliver whenever they have asked for it. And specifically, it gives the type, the grade, the quantity, the storage location, also the humidity. So looking to all these things, it gives a certificate to that. Earlier, which used to be in that paper format, now it is in the electronic form with both the repositories being into the area. Now, just to mention about what is ENWR and what is ENWR, it is basically issued in the electronic form by the WRDA, that is the Warehouse Development Regulatory Authority, through its repositories. The ownership, in case of ENWR, the ownership is of the specific, it represents ownership of specific quantity, quality of commodity stored in that particular warehouse. It is negotiable, it can be transferred, it can be sold, it can be pledged, it can be endorsed, without actually physically moving those goods. The legal title in this case of ENWR passes from the buyer or to the pledgee. But when it is an ENWR or double NRWR, it's not transferable. It is basically, it's just the title for that particular person. So it will only remain in his Demat account. As the original case was the agricultural commodity. So initially, ENWRs were designed for farm products like cereals, pulses, oilseeds, spices, etc. The benefit was that the farmers can deposit this crop after harvest and receive the ENWRs. He can use this for collaterals or loans. It avoids distress of selling it immediately after the harvest. It improves price discovery in a better way, seeking later when the prices are better. It supports delivery-based future trading. So these are one of the main, and subsequently this was not limited only to the agricultural commodity. The WDR and SEBI has enabled extension of ENWR's framework to metals also. Now, why this matters? Because it brings standardization and transparency. It enables exchange-traded metals, allows banks, NBFCs to treat metals ENWR as a valid collaterals. It supports the development of Indian electronic gold exchange and regarding bullions. So basically the big picture that the ENWR ecosystem is transforming Indian commodities market by digitalizing warehouse receipts. It's assisting physical commodities into financial market. It's enabling financing against the stored goods and extending these benefits beyond agricultural to metals. It's a key step towards Indian goal to becoming a global commodity hub. Can you go to the next slide? So just to rush you, this was just a brief of what is there in India today, 2 repositories. And so before we go to the repository system, who are the entities who are there in the capital market or in the market of commodities would be the investor, the repository participant, it will be the government, the regulators, the warehouses, the assayers, all these people in a mota way are the main ecosystem of the commodity market. As far as the repository system is concerned, it's the depositor. So what the depositor would do, he will first go and open a Demat account with the repository participant. It is what you can call it, so with that, it's an inception to deposit his goods. So with that document, he will go to the warehouse. In the warehouse, he will go and give all these documents with all relevant details, along with the goods, goods over there. That will be entered into the warehouse office. There will be an assessor who will looking into it. He will look into the quality and all the types of this. He will pass on that document to the warehouse office again. They will check it up to it. If the standards are met, it will be converted into an ENWR, that is electronic negotiable warehouse instrument. Now, after this has been credited into the BO's account, he has these in a free balance. Once it is there in his free balance, he can sell the goods. He can do a normal market. He can do an off market. He can pledge it to raise loans. So these are the ones, the benefit which are getting the foreign. Just to run through you about how the pain happens. The pain happens exactly like what it happens in the securities market with a little difference. Over here, the client will go with the instruction to his repository participant. He will give the instructions to them. They will carry out the maker-checker at that particular part. Once it is entered and it reaches the clearing corporation, his free balance will move to the earmark balance so that the securities or so that the commodities cannot be moved out from that particular account. Once this is done, at the clearing stage, the clearing will, the system, through the system, it will go to the clearing corporation. The clearing corporation will process the details. Once the same has been processed, again, it goes to the particular thing, and then it goes from the block balance to the free balances. On doing that particular thing, so then what happens, the sellers, the movement has happened from the seller's commodity, it has gone to the clearing corporation, stored there, the mixing happens over there, match happens over there, and once the buyer is met over there, the payout happens. Now on this payout, once the payout happens, the commodities will either move directly, depending on what kind of the buy it is, either it will move out to the clearing member's account, it will move out to the trading member's account, or if it's a direct payout, it will go directly to the client's account. Now, this is basically just given you around how operations happen in the commodities market. So,
Thanks, Farokh. So I think with an idea on how the entire clearing mechanism is working, the role of this dematerialization, I'll come back, Farokh bhai, for some other questions around that. I'll have a question for Jayprakash ji. So I think this entire ecosystem, the way it's working, so from a trading perspective, because they are into now our whole objective to encourage mass participation into this chain. So naturally, equities that way are highly integrated. But in a commodities space, how from getting an investor, trading, then clearing, and as we saw, there are so many participants which are not there in equities. So you'll have assayers who ensure quality of those goods. You have warehouses, physical warehouses, and those have to be connected. And you have repositories outside of the clearing mechanisms. Again, depending on the products, there are different repositories, unlike equities, which are again kind of fungible across. So how the entire trading chain, how it is currently set up, and what you think are the challenges and improvements that we need in the entire trading ecosystem using this dematerialized world in commodities. So if you can enlighten that, what efficiencies we need to create. Thank you.
Yeah, thank you, Manoj. And thanks, Farokh, for letting the audience run through the entire, the value chain, how the whole process works. See, the proof of the pudding is how robust you create an infrastructure. End of the day, whether the transaction happens or not. I'll take back, I'll go a couple of decades back. When in India, when the dematerialization was introduced, there was a huge jump which we saw in how the equities market started trading. People started finding that there is a lot of ease of transacting. I don't have to worry about whether my physical shares are getting delivered or not. The trust element which was missing from the market, that was brought in by streamlining the processes. I think the same kind of thrust should be there in commodities. We as a country, where people understand commodities, but when it comes to trading it on the exchange or doing a financial transaction with those commodities through the exchange and depository network, I think people still shy away from it. The primary reason which I personally feel is that it's the whole process is broken. End of the day, we need to make sure that the user should have a seamless experience. I think if we are able to fix that, we will see a lot of participation coming in. The second important factor I feel is about awareness. Today, when you go and speak about particular stock or capital market or IPO, you will find a plethora of information available both online and offline. But that kind of awareness level has not been created so far for commodities. I think if we as a market participants, the market infrastructure institutions, and everybody in the whole ecosystem of developing commodities come together and work towards making the life of the user, be it a corporate or be it an individual, if we are able to think from their point of view and create the whole process in a seamless manner, I think that could be a game changer. So just to give you a number perspective, we have close to almost 23 crore demat accounts. Okay, out of that, F&O traders would be around, say, 2 crores at this point, active traders. But compare that with equity, with commodities.
Right.
There would be few lakh of traders who come and participate in commodity derivatives. Okay, the reason is, the ease of transaction, one. The second is awareness. I think that the further challenges which are there, I'll definitely come to that later. We'll hear from the other panelists as well. But for me, the primary two reasons why, things are not working out should be addressed first.
So just additional thought there. I think it's a very pertinent point that the numbers within commodity trading markets are so low. So it can be looked both ways. I mean, the challenges are there, but if we overcome them, then the potential is huge. So I think that's one big takeaway, that what those challenges are there, which as a regulatory perspective or from an IT solutions perspective, we all can come together and implement. So thanks, Jayprakash ji, for that perspective. I'll now request Arnav if he can bring a perspective from a clearing perspective, and also the way he works closely with the apex regulators in this market. So what some of those regulatory initiatives are, how the operational scalability they are looking at for these participants, and that can further strengthen the ecosystem. So over to Arnav. He'll have a presentation also. You can start.
So we have heard so far what are the challenges in commodity space from Jayji, and we have also heard from CDSL that how currently the repository is working. But one thing which is a fact, a bitter fact, I would say, that in securities market we had this demat account, what we call, coming very early. And in commodities there were challenges to actually implement that, and what we see today as a demat account in commodities, that has actually come in a formal way around 2017-18 only, which is way later than what we have seen in securities market. And in this also, the commodity exchanges individually, they have been using the electronic account for quite some time, almost 20 years now. But formal way of associating with the repositories set up by WDRA, that is 2018, 2019 onwards only. That's why when I show you the data of accounts as well as how they are performing, it is 2019 onwards only I have put on the screen. Okay. But individually, exchanges were using this electronic account much earlier. So I have just listed out how the electronic accounts are beneficial across the different transactions. So on the left-hand side, you will see that on the exchange perspective, the delivery settlement through electronic accounts is much easier. You all know that one of the oldest exchanges was the rubber trading exchange based out of Ahmedabad. So those who are closely associated with commodity trading, they know that how they were operating with the physical warehouse receipts that time. So it used to come from Kerala to Ahmedabad. It will take around 1 day or 2 days to receive the warehouse receipts, and then the settlement, delivery settlement of those receipts will happen at the exchange level. And sometimes there were quite a good amount of mismatches, like if the receipts were supposed to be received 100 receipts, they are receiving 90 receipts. So what to do about those cases? So there were closeouts during that period. Quite a messy thing which was prevalent that time, and people were actually living with those messy things that time. Okay, so no, it was not about one exchange only. Many regional exchanges, they were also operating on physical warehouse receipts. But when this norm of national exchanges came into picture around 2003, 2004, that time, so all the exchanges came out with a concept of electronic account, which was in-house through their clearing house, and that's how the delivery settlement started with this electronic account, electronic warehouse receipt at the exchange level. Now, how does it help? It helps in the delivery settlement. It also helps in pledging of those commodity receipts. See, physical warehouse receipt, once you pledge it, it has to be physically marked somewhere in the receipt, the endorsement, what we call. So those were quite challenging things for exchanges to adopt. But when it is electronic receipt coming to exchanges, you all know that it is commodity receipts are accepted as a collateral, certainly up to a particular limit, but they can be given as collateral for the settlement purpose. So that also becomes much easier, much fast today. And what we have seen over the years and where we stand today, so today, if you are pledging a commodity receipt with clearing corporation, it is just a matter of few minutes that you are exempted from the margins. So that's how we have progressed over years. The second is the pledge finance by banks. We have one panelist giving the more details about it, but that is one convenience banks are having today. that when the receipt is electronic and it is seamlessly integrated with banks' systems also. So there is quite efficient system that is established for this pledge finance by banks. Third part is individual sale purchase. So we have seen that often in bullion segment, in metal segment, that if somebody wants to just transfer the goods, they can do it with the electronic accounts, electronic holdings that is available in their Demat account with the repositories. So currently repositories are not handling bullion or metals, but the in-house repository of M6 CCL. So they are having the holdings there. So they keep on transferring those goods. Those are bilateral trades also. And fourth is like these electronic warehouse receipts. When they are generated by the warehouses, so there is one API connectivity with the repository that is also something which is a new chapter opening up. So many state warehouses, central warehouses, and private warehouses also, they are getting connected themselves through API integration with the repositories, with the banks, that way. So there is a seamless movement of holding, seamless movement of transaction across the value chain. That's quite helpful. So with physical receipts, that kind of transaction, that kind of high volume scalability, that was quite difficult few years back. And if you see the numbers raising, like on the value, we are close to now 2 lakh crores. Just in a matter of 5-6 years, where we started with some negligible figures, maybe around in thousands. Now the value of goods in electronic accounts, I would say, across repositories and our in-house repository like that. So it is 2 lakh crores now. So the growth is quite significant, I would say. And similarly, on the number of account side, Jayji has focused, like anyway the number of accounts on commodities segment is very restricted. So in that restricted segment also, the growth of electronic accounts is quite significant. And with all the efficiencies that the users, the brokers, they would like to integrate into this whole ecosystem, I think this growth will be even more exponential in the years to come. Yeah, thank you, sir.
Yeah, any initiatives from a regulatory perspective to fuel this growth? You can.
Yes. So few things what we have done is like we have the electronic receipts on the vault side as well as on the warehousing side. So warehousing side, the norms are given by Warehousing Development Regulatory Authority, which is WDRA, based out of Delhi. So they are the warehouse regulators today in India. So one thing which was quite scattered and for which the confidence building was necessary at the warehouse level was how the goods are insured at the warehouse. Okay. So now if one warehouse is at, say, Ahmedabad, one warehouse is at Nagpur, and the same player is operating, he was quite anxious to know that how his goods are secured, insured at the warehouse. Because warehouse, you all know, the goods are physically stored, custodian is the warehouse owner, and there are chances that the goods are not kept well, or there are chances of theft, burglary, etc. So if that particular owner is operating at 2 different warehouses or more than 2 locations, so he has to individually go and check, whether the goods are insured. He has to get the insurance details from those locations separately. So on that, what WDRA has given guidelines that a particular warehouse chain, if they are operating at more than 1 location, so they have to take a floater insurance policy. And that floater insurance policy is also based on declaration basis. So I will explain what it is. So floater will be one policy which will cover all the locations they are operating. So it is at the warehousing company level, which is called warehouse man by WDRA. So that will be covering all the locations they are operating. So insurance, sum insured will be for all the locations together. And when the floater policy is based on declaration, means every day or every month, whenever the stock level changes, they have to declare to the insurance company that this is also add-on cover for this particular policy, which is the parent policy, parent floater insurance. This gives a lot of confidence to the holders of the goods, because many holders today, we know that they are having quite a frequent transaction at the warehouse level. Someday they are adding substantial quantity, few days later they are removing some quantity. So they want to have that peace of mind that all my goods whatever my managers or whatever my office is operating at the warehouse, they should be covered all the 24/7 hours. So this floater insurance policy is big game changer. It is now a norm by the regulator, so everybody has to follow that. And second is, of course, for encouraging these warehouses to operate under WDRA, certain security deposit norms are also rationalized, I would say. Certain fees are also rationalized, which started quite high and now they are at a mediocre level, I would say. So it is easier for warehouses to get into this ecosystem and operate under WDRA.
Thanks, Arnav, for those insights. I'll invite Kishore Bhai now. I think from a global perspective, I think there are a lot of learnings, because when we start any new infrastructure initiative or an institutional framework, if we inculcate the best practices in the beginning, naturally that gives it a big fillip. I think in equities also, when NSC was set up, so it had an advantage of getting some best practices globally, and that's how it kickstart with a very strong base. So I think in commodities also, we think there would be big areas where either from a policy perspective or our integrated solutions perspective, and so that will encourage not only our strong framework foundation of the entire ecosystem, but it will encourage participation from these global investors. So I think from Kishore Bhai's experience, we can gain insights on that also.
Good morning, everyone. In the interest of time, I'll skip some of the things most of us have covered. So ENWR and WDRA, we have heard what is going on. So, but globally, सबसे बड़ा मतलब the biggest delivery guys are LME, the Zhangzhou, the commodity exchange of China, and CME, of course, the bigger ones, right? And how they achieved seamless delivery, you don't see any news coverage where there is a bad delivery and all those things, right? And in the event of crude, we have seen when the negative close happened, it was purely delivery play, right? So despite crude is been forced to settle at minus $40, right? The exchange continued with that system, not breaking that system, right? It actually shows how robust is that system. So which we think is never possible is also possible in commodities. So I'll just directly jump into what we need rather than all those things. The entire trust is based on, see, 99% of the times, let's say every successful system works, let's say 99% of the time. But that 1% where it fails is where it breaks the trust, right? So how you resolve that 1%? Because we all fear that 1%. We are all, most of the times, we are sure of 95% of the future is going to be okay, right? Yeah, 99% of our future is okay. There is a 1% chance that something will happen, so I buy an insurance, right? That's what we try to cover. That's what the trust is all about, that 1%. So when this happens, when something goes wrong in the system, how you resolve, how quickly and how efficiently you resolve that dispute will restore back the system. This is simple. So if right now we have completely broken system as far as dispute resolution is concerned. So in commodities, especially physical commodities, agriculture, where the quality and the quantity of both can vary significantly, the upkeep of that commodity can be really bad and it loses its worth very quickly. It could be rain, it could be flood, it could be loss of moisture, everything could happen. But if that happens, what is my redressal mechanism? That's what it's going to be bad. So if I just look at the Zhangzhou and CME, there are both exchanges and the clearing corporations guarantee the delivery. In India, we don't. Especially clearing corporations shy away, saying that we only ensure that you have X amount of goods there. The quality of the goods again go back to the warehouse owner, the warehouse man. And you have to go to WDRA, which again SEBI doesn't address. So for financial transaction, you go to SEBI, then something goes wrong here, then I have to go to WDRA, which I don't have any. For example, as a broker also, I am not registered with WDRA. My client is not registered with WDRA. There is no way I have, so SEBI is answerable to me because as a broker, I am governed by SEBI. My clients come under the umbrella of SEBI. I go to SEBI arbitration mechanism. I go to the exchange, arbitration will solve my things. But here, it's a completely different regulator, which is not integrated. CME resolves all disputes within 5 to 15 days. That's their timeline. Otherwise, they will pay it from the guarantee fund. There is a delivery guarantee fund, which we don't have. We have a settlement guarantee fund on the exchange, but we don't have a delivery guarantee fund, right? That's what the China does in 7 days. That's the norm. 7 days dispute resolution. We don't have, I think we have some of the, quality quantity chhod do, GST related issues pending for years now. I have some of the transactions, right? Again, inspection and all those things, of course, our exchange also does some surprise checks. We also have some of these things, but it's more audit, but not on the qualitative checks. There's no random quality checks. There is a random quantity checks, right? Again, correct me if I'm wrong anywhere. We do count of the bags, count of this thing, but we don't randomly do the quality checks. I don't know. So if that is what frequency, I don't know. And the penalties are very severe. The reputation of that member or this thing, here it's just maybe you settlement and all those things. So in CME or especially in China, if you actually have a bad delivery, it will completely ban you from the ecosystem. So the reputation risk and the penalties are so severe there, so which actually makes them, it's like traffic regulations in India. हम तो भाई 100 रुपए में निकल जाते हैं, but वही दूसरा country में जाते हैं तो हम नहीं, we will not cross that dotted line, right? So, but this is the same thing. So in India, this is not the exchange ecosystem. The overall ecosystem of India is something like that, right? Can we go to the next slide, please? हो रहा था, अभी तक हो रहा था. So I think got hanged or something. Yeah.
जा रहा है next पे.
Yeah. So what we have and what is global best practice? Simple, 4 or 5 things. Dispute resolution, we don't have. I think what we need is an independent, let's name it like a commodity arbitration tribunal or something like that. It's a national level tribunal or something, which should consist WDRA and SEBI together. There is an arbitration panel. So whatever the disputes related to deliveries can go to this arbitration panel. But right now we have to approach courts. We know how delayed the justice will be in the court system. So arbitration has to happen. And some kind of a national level tribunal or a panel should be set up so that both the regulators can work together and combine this thing. Time frame, of course, in India, we don't have any stipulated time frame to dispute resolution. We need to have something like that. Right now, in India, the warehouse accreditation is only on WDRA, but accountability comes back to the exchanges. Again, exchanges doesn't report to them, all those things. The repositories are again operates in a very different silos. Can we have a national, let's say, interoperability kind of thing? Can I trade my receipts from one repository to the other easily and this thing? So I think these 2-3 things, if we address, I think the system will function very well. And we all are sure that system will break down that 1% of the time. So the entire trust comes from that how we resolve this 1% of breakdown. Right? That's from my side. Thank you.
Thanks, Kishore bhai. I think that also adds to the overall asks from a regulatory perspective. And obviously, I think the theme so far has been that tech is a big enabler to at least ensure all these integrations happen, provided the right kind of policy and the regulatory nudge pushes that participation behavior towards that. I'll invite Ajay now. I think as we discussed, trade financing is a key driver of growth of any market, especially in capital markets, and commodity being both being a traditional, I think, banking big stronghold on the finance side. So I think there is huge potential that using that as a funnel, we grow the overall trading infrastructure, the trading practices and participation on the commodities ecosystem as well. So I would like him to just run us through how that is building up. Again, what challenges they feel in integrating this entire end-to-end chain of trading, clearing, and then collateral and pledging. So that that creates a bigger footprint across the commodities market. Yeah, Ajay.
Yeah, thank you. Good morning to all. So I am here to give a banking perspective to this DMart finance. So as of today, when we talk about DMart, we were thinking about the ISIN, ICIN, all these things. But the time has changed. This DMart process and the warehouse receipt finance has gone a very long way, and now that is being regulated by a new regulator, WDRA. I think many of my panelists are, I think, experiencing the actions and the supervisory advisories from the WDRA. Maybe for them it is a new, but I have been dealing this WDRA since inception. As a banker, we have been financing, and we as a financial ecosystem, as a bank, we only focusing on the warehouse receipt finance, maybe the exchange, the broking firms, the repositories, and the RPs. They think in a different perspective, but as a lender, we see this as a watershed development in the Indian warehousing industry. So I will quickly take you through how this warehouse receipt finance has evolved over the years. If you think about 30, 40 years back, it was called as key loan, because the bank branch manager used to put a lock and key in the warehouse. He will count the bags and the quality, will come back to branch and will do the evaluation and disburse the loans. Then if you see by 2000, 2002, the warehouse men, especially the CWC, SWC, they used to issue the warehouse receipt, which is in the physical form. So that used to take some 8 to 9 days to come to bank for disbursing the loan. Then the exchanges have come up, the WSP has come up, NCMSL, NBSC, so many warehousing companies has come up. They started using the warehouse receipt in the electronic form. The scan form, the ICIN, all these things has come up, which took only 2 to 3 days to come to bank for financing. And of late, WDRA, the new regulator, which has come up recently, they have mandated all the warehouse receipts needs to be issued in the form of electronic negotiable warehouse receipt. That means they should be in electronic form, and these are negotiable just like a check. If you write in the backside, or you can just transfer the ownership online by marking a lien or endorsing. So this is how the warehouse finance receipt has evolved over the years. Now everything is paperless, electronic, and in a click away to transfer the ownership. So we all know about loan against the FD. We put the money in our account and mark a lien and disburse a loan. Similarly, somebody can keep the gold in the vault and mark a place, the bank and disburse. And the stocks and shares market also, we do the same way. But in commodity finance, again, it's almost same the way we do disburse the loan against FD, gold, and shares. But here it's slightly different because the agricultural commodities are perishable in nature. These are seasonal, and these are majorly bulkier in nature. We cannot keep them in a vault or somewhere. That needs to be kept in a warehouse. So similar value of gold and commodity, if we compare, they need a smaller vault. This need a bigger warehouse. So that way, the WDRA has come up with the electronic negotiable warehouse receipt, where the customer has to open a RP account. The way we open a DMart account in the stock market, they can keep the stock in the warehouse. The electronic warehouse receipt will be generated. That will be credited to the RP account. Then the customer sitting in the comfort of his office or home can mark a pledge in favor of the bank, then bank can disburse the loan. It is so seamless, and so the turnaround time is within minutes. Means the moment we receive the pledge request, we disburse the loan. We need not to check the quality, quantity, everything, because that is being taken care by the warehouse man, and that is governed and regulated by a regulated WDRA. There is a WDRA Act which clearly defines the roles, responsibility, penalty structure, grievances, mechanism. Everything is there in the Act. So basis that, no warehouse man can do any kind of fraudulent activity or misrepresentation or any kind of tampering, because as a lender, most of the lenders, they witnessed lots of fraud in the past. They lost 100 crores of rupees because there were duplicate issuance of warehouse receipt, there were double funding, all these things, which is not possible in the warehouse receipt, in the ENWR. So once the customer gets the ENWR in his RP account, he has so many options. He can go to a bank for a loan, he can come to exchange for hedging or trading, or he can go simply to the nearest APMC market. The ENAM, the Government of India's initiatives in the national agriculture market, considering the entire country as a single market. He can sell sitting in his office to anywhere in India. Sitting in Kochi, he can buy the mustard from Jaipur. Sitting in Madhya Pradesh, he can buy the spices from South. So that's how the beauty of this and the strength of the electronic negotiable warehouse receipt. Next. So this is the ecosystem. I think my panelists they have already explained the ecosystem, and the benefits, most of them has explained, and need not to repeat. The point I want to highlight here is this is negotiable and tradable. So what that means to a lender. As a lender, we give loan against the warehouse receipt. When the customer defaults, there used to be lots of operational issues, going to the warehouse, taking out the commodity physically and loading in the truck and selling to, finding a buyer, selling to somebody. But here, honestly speaking, I have disposed last month only, sitting in our corporate office. We simply found a buyer. We have transferred the electronic negotiable receipt to the buyer. He paid the money, and then the ownership changed. He went to the warehouse, took out the commodity, and that's where the lenders see how strong and robust is the electronic negotiable warehouse receipt. Fraud is very less what used to happen 10 years, 15 years down the line. Past experiences were almost nil. We have not seen any kind of fraud. There were minor mishaps. So the opportunity, the electronic negotiable warehouse receipt, if you see in India, there are 120 million metric ton warehouses. In WDR also 50 billion metric ton, that translates to 2 lakh crores. And we have 7,000 APMCs where you can trade the ENWRs. And again, if you see the exchanges annually, the physical deliveries comes to the extent of 2.5 lakhs tons, which is nothing but 1,000 crores. And ENWR agent today is in the banking system, 8 million metric ton we have financed, which is worth of 15,000 crores. And in this business, there is a potential of 2 lakh crores. But all the banks put together, we were able to do only 50,000 crores. So that's the potential opportunity lies in this ENWR finance. And this has been, I think, explained by my colleagues. I will just highlight one thing in the commodity derivative finance. Derivatives, options, futures, when some hedgers or somebody sold in the exchange, the stocks lying in the exchange warehouse, he has taken a position in the exchange. He comes to the bank, we mark a lien and disburse the loan. And by any chance, if he wants to physically deliver the stocks, he cannot physically deliver because there is a lien, bank's lien on the stocks. So the regulator, the other fintechs, they have to come up with some financial solutions, some kind of relaxation where the lien can be removed under the supervisory of the clearinghouse. The goods will be delivered to the buyer. When the settlement happens, the payout happens, the money should come to the loan account needs to be closed. So that kind of solutions, innovation needs to be developed so that the banks will come into, they can finance the commodity derivatives in the exchange. So at the same time, he can take a loan, he can take a position, the payout will happen, and the money will come, close the loan, balance will go to his account. So that will really revolutionize the derivative market and will give more liquidity in the system. So ENAM, I think, already explained. So that's the all opportunity and benefits we see in the ENWR. Thank you so much.
Thank you, Ajay, for running us through. So I think the way he explained, the 4 times potential is there as on date, but as the entire commodities base increases, so that can become 40 times also. I mean, looking at the way, like Jayprakash ji said, maybe just 1% is there into commodity, and delivery is even much below that. So I think Prashant ji, one big input from you that we all are seeking. So I think looking at the way equities infrastructure, the dematerialization ecosystem integration has happened, whether it's trading, clearing, collateral, pledging, that's a seamless experience. So I think similar, if we have to replicate on commodity side, so what are the best practices or learnings over the last 3 decades that he has been gone through? And again, whether it's from a business need or technology innovation that has helped in growing that space, which can be replicated on the commodity side. So that's one area. And the other interesting thing is, so far we have been discussing commodities trading through the exchange traded mechanism, which is mostly on limited exchanges like MCX or NCDX. But there is a huge equity infrastructure where government, SEBI has introduced EGR, electronic gold receipts. So that's one of the most common and well-aware commodity pan-India, and that is getting introduced through the equity exchanges. So I think there NSDL, CDSL are the depositories which will manage the gold receipts in electronic format. So I would request him to also explain a bit more on how EGR framework will be working. Yeah, Prashant.
Thank you, Manoj, and good morning, everyone. See, the depository system, which is under the jurisdictions of SEBI, we have already seen the commodities being the part of this whole journey over the period of time. It started somewhere around 2006 or 7, where we were holding electronic warehouse receipts, which were held or traded at MCX as well as NCDX and other commodity exchanges. We have seen the era where at that time it was precious metals as well as agri commodities. Then subsequently the era of the electronic gold receipts, which Manoj has mentioned, has started. Definitely it has given us a confidence that we will be able to demonstrate what equity exchanges and equity trading we have seen in terms of fungibility as well as interoperability. It doesn't matter where your demat account is, whether in NSDL or a CDSL. It doesn't matter where your broker is maintaining your account and where you are maintaining your demat account. And the third era is started under the GIFT IFSC, where the bullion receipts are already being traded and settled in the depository form. So with this whole background in the mind, definitely I have a different point is that SEBI as well as the ministry has already talking about the single operative demat account for all financial assets. And today the government securities, mutual fund unit, equities, corporate debts, these are the instruments which are under the SEBI jurisdictions as well as RBI are already being made available. So this is the right time where we can explore this commodity repository having a linkages with the SEBI depository, and there will be the interoperability, or there could be the scenario where the units can be held at both places. From where I am coming from, as you all know, the RBI is a depository for the GSEC. And from next month onwards, we are going to have a API with RBI, whereby the GSEC held in the e-Kuber system of RBI with a click of the button will be transferred to the demat account and vice versa. There will be the trading of GSEC on CCIL, which is the Exchange and Clearing Corporation for the Settlement, where seller can be in GSEC form, HGL, CHGL, and the buyer can be in demat form and vice versa. So that type of flexibility in terms of the conversion will be made available. And so if that type of the benefit what we can offer, why not explore it to the commodity receipts which are currently in the commodity repository. The second point is that when the commodity repositories are will made available in the depository form, basically the usability will increase, that it will not be given as a collateral to the CCPs of the commodity, but it can be given as a collateral to the CCPs of the NSE and BSE also. Today, the mutual fund unit, if it is demat, can be given as a collateral margin placed to the CCs. If it is government security, if it is demat, then it can be given. So we have seen that the usability of the product increases, the commodities increase, when we will see that it has been demat in the existing demat account, which is under SEBI jurisdictions. And we were looking for the EGR to reflect the same thing, because as I mentioned that it is giving a flexibility for the buyer to deposit the gold in Mumbai and seller to withdraw it from the Calcutta and vice versa. And it will also give the flexibility because the gold which I am depositing here is not getting delivered in Calcutta, but it is the same quality, and a depository is responsible to ensure that when the credit has happened, they have seen the quality in terms of the assessors and many more parameters which are the part of the commodity universe. And so with this thought in mind, we feel that the electronic gold receipt could be the good opportunity. 1 gram gold few years back and a 1 gram gold now, and 1 gram gold after few years, we don't know where it will be. And so now I remember when people used to go to the jeweler on Dhantaras and something, the minimum denomination was 0.5 gram. And now I don't know how many people will be able to afford 0.5 gram, because now there is nothing below denomination which will be in that. And so that's the reason today we have seen the digital gold being made available with a click of the button 24/7. And I know we are running short of time. I will just give an example. We were talking with some of the senior officers of one of the Fintech, and when his MD he came to our office and he was discussing, they observe there is one person, there are more than few crores of the investor on their app, and he is buying digital gold every day between 1 a.m. in the night and 2 a.m. And it was continuing for almost 10-15 years. So their MD called that person to their office to understand how from where it is coming from. And he said, I'm a small rickshawala. Throughout the day, I run the rickshaw. I reach home, then I calculate my profit, petrol expenses, and जो भी बचता है, उसका 10% मैं डिजी गोल्ड में डालता हूँ. So 50 rupees, 10 rupees. Why? And I started since last 15 years because it was a day when my daughter was born. And this is the journey for her marriage after 18 years. And today we know how the gold has given a return. So definitely the digital form of the gold coming on the other commodities will add the value. And if it is in the demat, definitely it will be the good boom, because all the benefits in terms of nomination, legal hire, and many will be made available. In fact, just to conclude that, we have made the cash available on the DigiLocker, where if a person died, DigiLocker will contact his legal hire and will tell him that the person who has nominated you, he's having this much asset, and now you do your KYC and take it. And so that's the reason I think it's the right time for the interoperability and fungibility between the commodity repositories and the SEBI depositories.
Yeah, thanks, Prashant ji. I think digitalization fuels these various channels to come together, and that's how the critical mass builds up. So I think commodity will definitely benefit from that. Jayprakash ji, you can add from a trading perspective also about this integration, and maybe some additional perspectives how clients are adapting to this integrated approach.
No, it's so heartening to hear this. In fact, I have been advocating this right from a retail user's perspective. So in every market, we need to understand that when there is a lot of participation, okay, the serious players also coming. It's a chicken and egg situation. Howsoever we have tried in the past of getting corporates coming and participating. Okay, once the retail push comes, I think there will be lot of volume and liquidity available in the market. Having said that, this could be a brilliant initiative, and we are speaking at a global fintech forum where the underlying philosophy is to use technology to make finance easier for every citizen in the country. Okay, so if someone holds gold, for example, why there is a need to have a separate demat account for gold? Why can't it be under the same demat account where the client holds its mutual fund units, its shares, and even insurance? So how it's going to benefit the end user is that he will have all his assets under one roof or under one depository. If there is a need for borrowing against that, it gives a lot of comfort to the lender as well, where he finds different asset classes with different exposure. So the risk from a lender's point of view also gets minimized, and the user gets an experience where he knows that, okay, in my holding, if I have something, I know this could be worth some amount, and I can easily transact. This will be a game changer, because in today's time, we see that I don't know how many thousands or lakh of crores of gold would be sitting in the household of Indians, if they get this window where, their units could be dematerialized, and it comes and sits in the book, in a demat account, see the kind of potential, which this brings in. Lakhs of crores of gold just lying as a dead asset can be brought in the mainstream, and that could, channelize the credit cycle. The whole economy can take off. I think on the larger scheme of things, I would really urge through this panel that we need to work on this seriously, because the kind of participation we are witnessing from the retail, from the middle class, from the salaried people in the country towards capital market, it's high time we create that synergy and a bridge between commodities and equities and other asset classes. Let us not see as both the asset classes in silos.
So thanks Jayprakash ji. I think we are towards the end, so I can summarize some of the key takeaways. So one is within the existing commodities ecosystem, where we are seeing that a lot needs to be done. So naturally, whether it's from clearing corporations, WDRA, repositories, the kind of integrated approach that we need first to scale up the existing foundation. And I think the second key theme is emerging is to ensure a mass participation, where we already know that, let's say, bank lending via FD kind of instruments or via the equity culture, how commodity can seamlessly be part of it, so we don't have to push things so much, whereas the adaptation would be automatic. So I think that that's the key takeaway, where we all see a great future on commodity side with participation from all. We are, I think already the time is over. Do we have further time if there is any Q&A? Yeah, so if there are any questions, kindly we can have 2 minutes for that. Yeah, please. Do we have a mic for them, or they can use? Okay.
No, no, I understand. I think, see, as a bank, we cannot give any loan if there is any past default history, okay? Be it FD or commodity. We treat equally. So far as your case is concerned, I don't think which branch you have approached at what time. Now, Government of India has come up with a guarantee scheme. There is a 1,000 crores guarantee scheme, and we are one of the largest among the private bank to give loan. Please, we can connect maybe offline. Yeah. Okay, sure. Thank you so much.
Yeah, any other last question? Even Prashant ji can take, because
24,000 tons है.
Sure.
Yeah, 20,000.
24,000 tons है अपने पास.
So that's on the weight side, but the value has gone up 5
बाहर
times.
लेके आना चाहता है क्या पूछो. मैडम को पूछो.
No, there has to be some kind of mechanism for that. We need to create that comfort. कि भैया मैं आज गोल्ड लेके जमा कर दूं तो कल I should not get scrutinized by some authority. So that ease and the confidence, okay, that no questions asked. I had the gold, okay, but I am willing to bring it to the mainstream. and let those be allowed. I think those policies require a lot of deliberation, and once it comes into the economy, I think the outcome would be, I think for n number of years we could be around 8% plus of GDP once we are able to do that. Yeah.
See, it's more of a mindset which we Indians have. Just to give you on a lighter note, as far as earlier securities were concerned, a physical certificate signed by JRD Tata, people never used to get it dematted. They used to put it under the pillow and sleep. On a lighter note.
You can't wear the certificate.
Sure, sure.
So basically, we are talking of an ecosystem where there are multiple regulators, starting with WDRA, then comes RBI, then SEBI, and who knows who will be the next regulator into the entire fold. So the best thing that can be done, like one of the points highlighted by one panelist, is slowness in the act in terms of disposing of cases.
Yeah, the speed of dispute resolution.
The redressal mechanism. So probably of these, all the regulators, if there is a cell created who is linked to all, but there should be the one point contact for driving the change, regulating overlay. I mean, that will make the process easier for everyone.
Yes, yes, yes. So point well taken. I think that's the thumb rule in any institutional mechanism. The touch point starts with the access. If the access is easy, that's how you are encouraged, right, to come to it. And that's what I think most of the panelists said, that if we start with simpler products, a channel via FD or a channel via equity, so that's how adaptation becomes easy. And the trust factor is what I think from a regulatory perspective we should have.
Yeah, the common tribunal is needed
That's
actually.
what Kishore bhai also suggested. So the Tata name, so once that common tribunal has that trust factor, that's how masses will be encouraged to participate. That's true. So I think with this we end the session. I once again thanks the esteemed panelists for taking their time out. Thank you all your presence here, taking time out for this session. Thank you.